All right, look, don't hate the player, hate the game, because yes, I sold my Tesla position. I didn't even just take profit. I sold the entirety of the position. I'm going to break down why, and I also want to talk about dividend stocks, what I'm doing with some of that capital, because we can see I'm sitting on a lot of capital right now because of the gains that we took on Tesla. I already reinvested some of those, but before we come back to this, because I'm astounded that today the portfolio just crossed over $300,000, which is mind-blowing that this has happened in such a short period of time. The market is not updated with today's gains, but I did the math, and between the cash position and the 270K we have invested here, we are in a very intriguing place in the market. So firstly, let's talk about Tesla itself, right? I told you guys that I was buying Tesla here. Let's zoom out on a 6 month. I've been buying Tesla all the way down to the 140s, all the way through this for the last 3 or 4 months, let's say, right? And I was on the presumption that Tesla was going to continue to do worse rather than do better. Like, I was like, if I'm buying this thing in the 180s, average, and I presume the stock could drop down to maybe 150, I'm happy cost averaging here, because I presume the worst that's going to happen is the stock was going to tank 50%. I wasn't really anticipating that we'd see 40 or 50% run, right? And I kind of came to this conclusion that if I'm not willing to buy the stock here, why am I willing to hold it, right? Because I was saying that if it ran to 300, I would definitely take profit. But once it hit 260 yesterday, on Monday here, it kind of ran back up after this drop. The shooting thing happened. Elon came out and started supporting Trump. This thing skyrocketed, and at about 260 a share was my average sell price. And I locked in a 40% profit, about an $8,000. I wish 80, about an 8,000 US dollar gain. Now, if this thing ran to 300 where I would have sold it, I kind of left about an extra 4,000 US on the table, but I didn't want to really take the risk of an 8,000 US gain, a 40% gain in just a few months, right? So I ended up taking that profit, and I might buy back in. I'm still sitting on that cash. We'll see where this kind of takes me and what I end up doing with it, because I'm really looking at tech heading into an earnings period that is going to be very volatile, right? I mean, Tesla, I think they're going to be able to start pulling themselves out of the slump. I don't think we're going to see margins decreasing anymore. Obviously, the price of goods for their construction of the vehicles have dropped pretty dramatically. Lithium's down, all that stuff. So I think this is part of that recovery, and I think people are pricing it in to some extent. But with the robo-taxi event delayed, a lot delaying going on as per usual, I figure if the stock drops, I'll have an opportunity to get back into it after earnings. If it rallies after earnings, hey, better opportunity for someone else to take on that risk. I mean, many of you know I sold Google out early, right? Like, I'm notorious for selling things too early, because I sold Google out at about an 18 or 19% gain. I rode this thing up to about, I think right around here is where I sold out of it, somewhere in the 170 range, and the thing continued to run like another 10%. I don't know what the future is going to hold here, folks, but I'm a guy of diversity, right? Like, I love my indexes. When I'm playing these individual stocks, that's what I'm doing. I'm playing, I'm gambling, I'm speculating. So let's just make sure there's a defining factor between me taking the path of least resistance and then me putting capital at risk, because right now, the S&P has been on an absolute face-ripping tear. We are up 19 damn percent. The NASDAQ is up 24% this year. You know how crazy this is? These gains, and I'm not selling that. I bought into it, actually. I took some of those gains. I bought a bit more S&P. I bought some more SCHD, and I put a huge lump of that capital still just sitting there. And I'm looking at this being like, okay, what happens after this? If we're going to try and make a calculated decision, a calculated speculation on where this money is going to offer the highest rate of return in this shorter period of time, I've been making some bets here that I presume it's going to be in the lower half of the market. We have not seen a rotational event like this in quite a period of time, and we don't know if it's short-lived or if it's the start of what is going to lead up to the interest rate cuts in the U.S. and the continual interest rate cuts here in Canada, because people have been selling tech stocks, which makes sense. Tech is extremely valued here. Earnings need to be perfect, flawless to justify Microsoft's 40 times multiple. I mean, even Apple's running here on some speculation of some upsales in India and stuff like that. But these stocks have gotten crazy expensive, right? I mean, they need perfection continually. And I'm not saying that earnings won't be perfect. I'd rather they be perfect, because then the market continues to go up. But even still, with tech selling off over the last week, the markets are still up. I mean, you take a look at the last 5 days here, the S&P's up almost another percentage point, and the NASDAQ is actually down, because there's a rotation happening. That money isn't leaving the market, right? Like, the money is just going out of one sector into a bunch of other sectors. I mean, Home Depot's up 8% in the last week. A lot of these stocks I have great exposure to within, SCHD. And I'm looking at this saying, hey, is this a trend that is likely going to continue? I mean, we're not going to get interest rate cuts for another couple months. I'm not sure if this is just people kind of preemptively building up the hype, trying to lock in some higher yields before they have to get rid of their fixed assets like their savings accounts, their bonds, or GICs, right? When you take a look at the Schwab US Dividend Equity ETF, we are now at almost 81 bucks. You know, you take a look at VYM, a lot of these DGRO, they're all bouncing pretty hard right now. And I'm curious if, again, this is a rotational trend that is going to continue. If it is, I'm going to benefit greatly because obviously, I have huge exposure to SCHD. I just bought some more. Goal is to get SCHD probably to 100K position. We might be able to get there with just, a nice 5 or 10% rally beyond this. Could really help get us there with some dividends reinvested as well. But at this point, we are, and again, when I'm talking about 100,000, I mean CAD, right? Like the CAD converted values, these numbers you're looking at, just keep that in mind. I'm not living in the US, so these numbers probably not as juicy as they would be if they were all in US dollars. We also surpassed 500 a month in dividends again for the first time in a long time. This is likely to continue, especially if I reinvest. I got 30K here. I mean, 30K at 4 or 5%. If we chase the dividend yields here, I mean, it could easily allow me to take another month off if I can live off 1,200-1,500 a month. It could definitely pay a lot of bills over a month with that kind of increase if I'm looking for income-oriented stocks. Again, not saying that's where all that money's going to go just yet, but I'm definitely looking at things like VDY. I mean, even the Canadian markets are starting to rebound here. Paying really close attention to a lot of the Canadian stocks because, like I said, this rotation that's happening, it seems like if it doesn't happen in the States, it doesn't happen in Canada. Canada preemptively already cut interest rates. And you'd think we'd get a rally on some of these stocks that are going to benefit from not having to pay as high of interest on their loans. But that hasn't happened yet. But that rotation is going to come at some point in the future. Heck, we're even seeing real estate, right? Like real estate jumped up huge. Just the hint of an interest rate cut in the States, V&Q is up a lot. This is another play that I've been looking at that I find relatively interesting, right? Because, I mean, down 23% still from the highs. It has not done anything for the last 2 years. As interest rates have been absolutely crushing this ETF. But again, when you take a look at, let's just take a look at the yield on VNQ, because you kind of got to look at this as nothing's really going to happen until rate cuts come around. What's the yield on this guy? We don't see a yield. Where's the yield? We've got a 13% expense. Maybe I'll just take a look at it on Yahoo real quick. Does it show me the yield here? I mean, the yield I don't think is too. Yeah, about 4.25% is not bad either, right? Especially if you catch this on some of these crazy dips. So I'm kind of taking a look at it as maybe we see a rotational cut from tech into some of these, these more dividend-oriented companies that are highly affected by interest rates. Because once we get into this continual cut cycle, I feel like we're going to see a continual rally in stocks like this. So I'm looking at them saying, hey, there's some opportunity here perhaps over the next 6 to 12 months that might even yield better than what's going on with some tech companies right now if we start seeing a continual shift and these companies can't justify it. Like, again, Microsoft, right? Like, I mean, they're making the same revenue growth that they were in 2019. Yeah, their PE is like 10 point higher than it was back in 2019. Like, it can't, is that justifiable? I don't know. Maybe it is. Maybe it's not. I'm just playing the field. Don't hate me. Don't hate me. Like I said, I don't know what I'm doing any more than you guys, and I still love Tesla for the long play, but there's so much risk when I'm up 40% with no factor driving that value, and I wouldn't be buying it here. People are. I think they're crazy. Again, they might not be. Earnings might pump this thing to 300. I just, for my own personal taste, I just can't buy it here, so why am I holding it here is kind of my thesis. We'll see what happens. Again, I'd love to get back in and play some of this for the robotics and self-driving, but we'll see what the stock does after earnings. We'll just kind of sideline this and see what happens. But you have to subscribe to find out. So let me know what you think in that comment section below.